In this presentation, I want to highlight the features, the characteristics of a public equity impact investing. A kind of from a deep dive into its key characteristics. A public equity impact investing focuses on generating positive social and environmental outcome alongside financial returns or financial gains or benefits through investment in publicly traded companies. So here are some key features of public equity impact investing. Number one is social and environmental objectives. That social as well as environmental objectives. So the primary goal, the primary aim or targets, is to achieve measurable social or environmental impacts, such as improving health care, improving education, or the adoption of renewable energy, accessibility, access to renewable energy. These are factors one could really take into consideration, areas one would want to influence positively with this nature of investing. Number two is integration of ESG factors. So investors consider environmental, social, and governance criteria in their investment decisions. They tend to assess how companies manage risk and opportunities related to sustainability. So how is the company doing? How is the company managing the inherent risk as well as the sustainability issue when it comes to their investment commitment? So the investor, gets to see how, they could integrate all these things into the investment strategy. Number three is shareholder engagement. Shareholder engagement. So investors often engage with companies to encourage better practices related to impact objectives. This can involve voting on shareholder resolutions, dialogue with management, and advocating for transparency when it comes to ESG reporting. Sometimes this issue of greenwashing, presenting what is not the actual fact. So at the time you adequately realize and you adequately through your votes participate in the entire process, you discover that there will be that advocacy for transparency when it comes to reporting as it relates to the impacts achieved so far. Number four is impact measurements. There's clear metrics. Clear metrics are established to evaluate the social and environmental impact of investments, allowing investors to assess performance over time. This can include metrics like carbon emission and reduction in carbon emission, as well as job creation, or access to certain kind of services. So number five is a long-term focus. Long-term focus. Public equity impact investing often emphasizes long-term value creation rather than short-term gains, aligning with sustainable development goals. So you invest with a long-time horizon, because sometimes, most of the times, it takes a longer time frame for this impact to be realized. You're not in a hurry to cash out. You have that patience that yes, you're investing in this company and they are doing, XYZ, in line with environmental impact or sustainability. So you wait for the impact to be created. And as you do that, you end up making profits as well as achieving the impact you want to achieve. Number six is diverse portfolio. Diverse portfolio. Investors may diversify their portfolios across various sectors that align with their impact goals, such as renewable energy, sustainable agriculture, or affordable housing. Simply choose companies that align with your goals and objectives, your personal values, so you can invest in those companies. And by so doing, you kind of adequately diversify your portfolio across companies that meet your criteria. Number 7 is risk-adjusted returns. So while prioritizing impact, investors also seek competitive financial returns, balancing the potential for growth with the risk associated with impact focused sectors. So you have to balance the risks inherent in it. You have to think about potential growth and related factors that can you know affect your investment one way or the other. Number 8 is access to public markets. Access to public markets. Public equity provides a more liquid investment option compared to private equity or direct investment, making it easier for investors to enter and exit positions. Unlike what is obtainable in private equity uh, investments, you can very easily exit your position. Your money is not locked up or locked in for a certain length of time. No, at any time you can simply sell off your shares in the market and you recover your capital back. And in a case where there's a capital appreciation, you equally make additional profit as a result. So that's what access to public markets, gives you. Number 9 is regulatory compliance. Impact investors must navigate regulations related to sustainability and reporting standards, which can vary, from one country to the other or from one market to the other. So you have to see how you could or rather the company you're invested in will comply to these regulations here and there. Number 10 is collaboration and partnerships. Collaboration and partnerships. And so many public equity impact investors collaborate with NGOs, with non-governmental organizations, academic institutions, as well as some other stakeholders to enhance their impacts and best practices. There's a particular institution very close to where I'm recording now. A particular NGO came in and established a kind of solar energy, farm for the institution, and they are really benefiting maximally. They don't need to buy, fuel, diesel for their generator. They have kind of adequate, solar energy supply. And so these features highlights how public equity impacts investing. How public equity impact investing seeks to blend financial performance with positive societal contributions and appealing to a growing segment of investors interested in responsible investing. And so if you really want to make an impact and also make profits, this particular one is for you. And it's so easy that you can just obtain this kind of, you could benefit from this strategy by simply buying, relevant stocks in the stock exchange. So it makes the entire process very easy. Instead of investing, in an individual capacity, you could just do it through the stock market. The liquidity is there and the profit is equally there, all things being equal.